Right now, what you're looking at on the chart is a very interesting moment for Velvet because this is exactly the type of structure where a lot of people either make money or get completely trapped depending on how they read it. And if you zoom out for just a second, you can clearly see that this coin spent a decent amount of time moving sideways in what we call an accumulation phase, where price was relatively flat, volume was not doing anything crazy, and most people probably ignored it because it wasn't exciting. But that is usually where smarter players start positioning before a move actually happens. And now what we're seeing is a transition out of that range into a clear uptrend with higher highs and higher lows forming consistently, which is the first major signal that something has changed in terms of market behavior and sentiment around this coin. And this is important because most meme coins or low cap projects don't actually build structure like this. They just spike and die. But here we're seeing a more controlled and sustained movement, which already tells you that there is some level of demand building underneath the surface. Now, if we focus a bit more on the current price action, you can see that the candles are starting to push up aggressively, and price is hugging the upper Bollinger Band. And whenever you see that happen, it means momentum is strong and buyers are currently in control. But at the exact same time, it also signals that the move might be getting stretched in the short term, because price doesn't usually stay extended outside or along the upper band forever. It tends to snap back or at least cool off. So this is where a lot of newer traders make a mistake because they see green candles, they feel like they're missing out, and they jump in right at the moment where risk is actually increasing rather than decreasing. So even though this looks bullish, and it is bullish in terms of trend, the timing of entry becomes critical here. Looking at the RSI gives us even more confirmation of that idea because RSI is currently sitting around 76, which is clearly an overbought territory. And again, this does not mean the price has to drop immediately, because in strong trends, RSI can stay overbought for a while. But it does mean that statistically, the probability of a short-term pullback or consolidation increases the higher this number goes. And if you look at previous points on the chart where RSI reached similar levels, you can notice that price often either pulled back slightly or moved sideways before continuing higher. So what we're likely seeing here is not the end of the move, but rather a point where the market might need to reset before deciding its next direction. Now let's bring in MACD because this is where things get a bit more interesting and a bit more bullish at the same time. The MACD line is clearly above the signal line and the histogram is expanding, which tells us that momentum is still building and buyers are not stepping away yet. And this is important because sometimes you can have RSI overbought, but MACD already weakening, which would be a stronger warning sign. But in this case, MACD is still supporting the move, which suggests that even if we get a pullback, it could be shallow and followed by continuation rather than a full trend reversal. So the overall picture here is a bullish trend with strong momentum, but short-term overheating conditions. Another thing that stands out when you look at the chart more closely is how clean the structure is in terms of higher lows. Every time price dips, it gets bought up at a higher level than before, which shows confidence from buyers and a willingness to step in earlier on each retrace. And that is usually what defines a healthy uptrend, because instead of sharp drops and panic selling, you get controlled pullbacks and steady continuation. And as long as that structure holds, meaning as long as those higher lows keep forming, the trend remains intact. But the moment that structure breaks and we start seeing lower lows, that is when you need to reassess, because that would indicate a potential shift in market dynamics. Volume also plays a role here, and even though it's not exploding constantly, you can see spikes during key moves, which indicates that when price starts moving, there is participation coming in. And that's another sign that this is not completely dead liquidity, but rather something that has attention building around it. And attention is extremely important, especially for coins in this market cap range, because it doesn't take a massive amount of capital to push them significantly higher. But it also means they can drop just as fast if that attention disappears. Now, if we translate all of this into something simple and actionable, it basically comes down to this. The trend is bullish and the structure supports further upside. Momentum is still in favor of buyers based on MACD and price positioning, but the market is currently slightly overheated based on RSI and Bollinger Band extension, which increases the likelihood of a short-term pullback or consolidation. So chasing here carries higher risk while waiting for a better entry during a dip or sideways movement could provide a more favorable setup. This is also where psychology comes into play because when people see a chart like this, they often feel urgency. They feel like if they don't enter right now, they will miss the entire move. But in reality, markets rarely move in straight lines forever, and there are usually multiple opportunities to enter if the trend is real. And understanding that helps you avoid emotional decisions and instead focus on positioning with better risk management. At the same time, it's important to recognize that strong trends can continue longer than expected. So while waiting for a pullback is generally smarter than chasing, you also need to be aware that the market might not give you the perfect entry and could continue pushing higher, which is why experienced traders often scale in rather than going all in at once, allowing them to participate in the move while still managing risk if a pullback does happen. Another key thing to watch from this point forward is how price reacts at potential resistance levels, because if this current push leads to a breakout above previous highs with strong volume, that could trigger another leg up as more participants notice the move and jump in. But if price gets rejected and starts forming lower highs in the short term, that would be an early sign that momentum is slowing down and a deeper pullback could follow. So the next few candles and how they behave around these levels are going to be very important. So overall, what we're seeing on this chart is not just a random spike, but a structured move with real momentum behind it. And that's what makes it interesting, because it suggests there is something more than just short-term hype driving this. But at the same time, the current positioning means you have to be careful with timing, because entering at the wrong moment can easily turn a good idea into a bad trade. In simple terms, the market is bullish but extended, strong but slightly overheated, trending but due for a potential cool down. And this is exactly the type of setup where patience and discipline matter more than anything else, because the opportunity is there, but only if you approach it correctly, instead of reacting emotionally to the current price action.